was so funny, so they went out, they met for a drink.
Hello, okay. I'm calling this meeting to order now at 6:02 p.m. That being said, I'm going to turn this over to Mike Weaver. But before I start, I just want to thank all of our guests that are here, the staff from the cabinet, as well as Ms. Joanne Stirk, who I really appreciate all the work that you've done for us and working with Mike and for being here tonight. So thank you very much. Mike, go ahead.
Thank you, Rich. That's good. So tonight we're going to be presenting the financials for the period ending 4/30/2025. Supporting document, yeah.
Put you through the narrative first.
Okay, I think we all have it in paper here, right? For the month, general fund expenditures were 15.2 million. It's slightly higher, you'll see, this year as this month in comparison to previous months. As we begin to close out the year, people will be putting their purchases in. We're also very well aware of the fact that previously the timing of purchases, although mostly in the grants fund, but that the purchases have to be recorded in the period where the goods or services were received. So instead of trying to pre-purchase things for the following year, which then get moved and cause a surplus, we're purchasing the things that we need now. So that's part of the reason of the higher expense. For the year to date, a total of 115.4 million, and there's an additional $43.2 million encumbered. And as I mentioned a couple of times, and we'll see again in a later slide, we're going through the encumbrances now. And now I'm down to doing it on a weekly basis, but looking at each of the encumbrances, especially for the general fund, and making sure that they are legitimate encumbrances, and then any estimates that were made for the encumbrances are still being held true, so that the number looks like it's going to be as accurate as possible. And that's against a general fund budget of 160 million. I just wanted to point out one other thing down where it says other items. We've been reclassing folks in and out of, for example, the Alliance grant, the title grants, to make sure that people are being charged where they should be. It is a very tedious process, but Angela Walsh and I have kind of been tag teaming that. Just that briefly, the way the process works is that once we identify someone who's incorrectly coded in the system, Angela will run a report of everyone that change pertains to, and she will go in and change their coding in their personnel file. That then causes a journal entry to be put into queue for me to review, and that will move their expense year to date as well as all their future encumbrances. So then I go in and I review the journal entry to make sure it's correct. It's almost 100% of the time it's correct because it is system generated. I then post the entries, and then we go back and review each of the lines to see where the people came out of and where they went to, just to make sure that it went through correctly. So it is a little bit of a task. Each person that we move creates its own journal entry. So this month, I think, Angela, correct me if I'm wrong, we did about 300 separate journal entries. So you'll see that people are moving from on a regular basis in and out. That process is continuing. The most recent change that we made is in the para-educators. Some of the para-educators were being charged salaries, which is correct, they're W-2 employees. Some of the para-educators were charged to the 53,000 accounts, which are purchase services, which I had always thought was odd because they're W-2 employees, they should be in the salary line. So we undertook that. We had to go into each and every single location and find every paraeducator that was charged and or encumbered to a 53,000 line, and then make the journal entry to move them. So we did do that, and we'll discuss that a little bit in the future. But as we move along and notice that people are either incorrectly coded or incorrectly charged, we are moving them, but we do have a vast majority of them done. After we've moved all of them in and out of Alliance, the titles, and now the big move with the paraeducators being moved to the salary line. Yeah.
Mike, I just want to clarify that some of these folks are being moved out of the general fund to grant funds, and some are being moved out of grant funds and into the general fund. Is that right?
And in addition, some people in the grants fund are staying in the grants fund, but they're being moved to either a different grant or a different line. And seeing in general fund, some of them are staying inside general fund, but they're either moving, their location was incorrect, or perhaps someone that we noticed was a school counselor, they were coded as a teacher. So some of them are even inter-fund as well.
Okay, thank you.
Mike, I've got a question, but before I do, Michelle, welcome. Normally, on the committees, we would have non-committee members ask questions later, but since very few here, just raise your hand and just incorporate it as a subject. So, Teresa, let me ask you a question, and then I'll get to you. The work you're doing currently, Mike, and that you just explained, is part of the cleanup process for the prior years as well as for the current year that we were in, and what the keys will continue. Come July 1st, when the new budget is prepared, is that going to necessitate, again, looking at different individuals or all the individuals and finding out where you're going to have to put them in order to accommodate the budget that you're going to create for next year?
Yeah, that's a good question, and I wish the answer was once we did this, that was it. But the fact is, sometimes folks will move from one location to another, or perhaps they take a different assignment. And I think that there'll be few and far between. It'll be nothing as drastic as these. But in reviewing this and seeing that part of the reason this happened is due to when the implementation was done, the district was forced to give Tyler Technologies a list of everyone and what their codes were. And I think that it was probably during a crunch time in COVID, they didn't have enough time to make sure that everything was accurate. So a lot of them went in initially inaccurate. And then as people were added, they were added they were not added accurately. So I think that's the majority of it. But in addition, one thing that wasn't happening that we're going to do going forward is after each payroll is produce a list, we call it the labor distribution, and it's a list of each employee by name and where they're being charged. And since we built this out to the best of our ability by location, I can then take that report and give it to the individuals in charge of that location, and they can look and say, yes, this person is mine. Correct.
I'm hopeful that next year, with all of the work, and that's what you just said, that the next year's statements would be more reflective of current statements and not have a backlog as we have in the past 3 years of cleaning up a lot of stuff. Teresa?
Well, I wanted to ask, in the this type of citing positions and grants, doesn't this maneuver continue on as grants expire and they have to be moved into other areas? So it's like a never-ending battle?
Yeah.
It is, but I think a majority of the reclasses that we're going to do on the whole, if you look at the number we're doing this year versus what we're going to have to do just to maintain it once it's correct, I think it'll probably be maybe a tenth of the entries, I'm assuming.
Thank you.
Mike, the other question I have is, in your narrative, there's an indication about the Cigna rebate. Can you explain that? Because to my knowledge, I've never heard about this before. And as much as it is a very pleasant surprise, and the amount of money is extraordinary as a surprise to that. I do want to ask you more about what it is, if it's happened before, and if it has happened before, is there a way that we could find out from Cigna, or if you have the information on this, at least for the last 5 years, what the amounts have been? I'm not saying I know everything, but this is a big number. And what I'm going to suggest is, and the reason I asked for the last 5 years, is in the preparation of next year's budget, I would like to see, depending on what your answer is to the last 5 years, this is just a shut deal. But if it's something that continues, that there be some sort of a placeholder in our budget line, so that with the change in board members possibly happening, they would be alerted to the fact that this money may be coming in, and it won't be such a surprise to them as well. So I think the more that we learn as a result of your cleanups, the better off we are trying to incorporate these into our financial statements, so that they have more meanings to us. So maybe we can explain what this is and how it comes about.
Yes, definitely. Rich, I think before you continue, carry ahead.
Yeah, it was basically to a point to the other question and point that Teresa raised, was that part of the havoc that gets wreaked in our budget stems from the fact that we do have a lot of grants. We live heavily on the grants, and grants come and go. They change. Those amounts they change, but also the funding. So over the last couple of years, we've had erratic shifts in funding, COVID funding, ESSER, one-time funding, ARPA. So that requires moving all the people. Every time those fundings shift, those folks need a new home, they need a new location. And there's about 3 or 4 different places that you have to get right. You have to put them in the grant system in one way. You have to make sure that they're in a certain location, that the funding source is being charged, and that all the things that go with that person are either coming out of the grant or coming out of another source. So there's a lot to it. I just wanted to add that part of the difficulty is the shifting funding sources for us. It's been a little bit of a problem.
This year, in talks with Gallagher, who, just for a refresher, is our third-party team that helps us with our benefits administration, they mentioned a rebate. And last year there was a rebate. It was much smaller. It was about $800,000, and it's a pharmacy rebate, is what it's called. And essentially, they are engaging in certain cost-saving programs through pharmacy, and that results in a rebate to us. Last year, I said it was around $800,000. I don't know, Joanne, if you remember the number. I know you booked the entry. This year was a little bit of a surprise. It was doubled 1.6. And on our phone call with Gallagher, they said that Gallagher was able to negotiate with Cigna to get us 100% of the rebate, whereas previously it wasn't. So last year the rebate was about $800,000. This year is 1.6 because we got the full amount of the rebate.
Is this something that throughout the year we can get an assessment from Cigna as to where the rebate stands, or is it something that's just an annual number? My point being, last year, prior to the unforeseen, situation that developed, we were led down a path that things were going to be maybe negative or break even, and yet there is $800,000 that came in that we didn't know anything about revenue about. But going forward, is this something that we can monitor on a quarterly basis, or is it something that's only known on an annual basis?
It's a one-time, once per year, but we do know about it ahead of time. So I have the approximate number for, if I don't, I should shortly have the approximate number for 2026 by now. And it is not guaranteed. I did ask if it was contractual guarantee that we get at least a certain amount. It is not a guarantee, but the way they said is you can expect something. And I believe that the guarantee, the number that was floated for 24-25 was 1.8, and it came in at 1.6. I think it's also based on utilization, so the more pharmacy that's used, the bigger the rebate can potentially be.
So you would have some basis to put in some sort of a placeholder based on actual information
Yeah.
that would alleviate that situation. And as I said, I've never heard of it before. I don't know whether any other board members have, but it's certainly a pleasant surprise. And I wish in my personal life I got a nice check for this amount of money, Teresa.
Where's that money? Does it go in our general fund, or does it go, I mean,
Yep.
is that part of the 1.4 million?
Yeah, so if you want
Ballots?
if you want to flip the page to the summary, what we did is we had to wait until we saw it come into the bank account, and once we did, Angela did a journal entry, and she credited our expense. So you'll see that in the second line down, that employee benefits, and again, I'm going to say this every time I have to read this, it says employee benefits, Social Security, but it's actually more than just Social Security. The budget is 30.8 million. We've year-to-date spent 20.1 with an additional 6.2 encumbered. So we have a favorable balance of 4.488. And then there's a little 1 at the end of that. And if you go down to the notes, you'll see that is reflecting the 1.6 million. So the number is actually sitting in the employee benefits line as a credit against the expense.
So Mike, with the positive balance of, of 1.4, if we didn't have the 1.6, then we'd be negative $200,000.
Correct.
That doesn't, and 2 months ago, doesn't leave us in a very comfortable position, certainly contrary to the way the last 2 years have been. That being said, I'm glad it's a 1.4 positive. But do you foresee a lot more entries in the year 20, in the current year that you're working on that has to be done to clean things up?
Yes.
Change these numbers significantly.
That is a very good point. If we did have the 1.6, there would be a negative balance. And before Angela did the entry, it was indeed a negative 200,000, $200,000. And I want to explain where that comes from and why that's not so concerning to me. And we're going to see another addendum later on the ARPA funds and what the plans were for the 7.5, which then turned to 7.7 in ARPA. But so the first line, salaries, you'll see there, salaries are over $1.26 million. And in addition, there's also another big number down here, enrollment impact is a negative 1.8. So we had, as part of the $7.5 million ARPA, we had plans to spend money, those ARPA funds, to restore positions. Those positions, Karen and I said that we were going to, until we really had our hands around the ARPA funds, we were going to leave them in general fund to the extent that we can absorb the expense here, and then move them over as we need them. And the thought process there was we have 2 years to spend that $7.7 million. So strategically, whether we use it now or whether we use it next year, it's still the same amount. So we have the ARPA salaries, which were for the media center, which were the librarians, as well as coaches, staff in DHS West, and additional staff at DHS. So there are salaries in here that we, when the budget was done, would have been spent against that 7.7. So although we are negative $1.26 million, that number is essentially sitting in our grants fund in the ARPA amount. The ARPA amount, as it stands right now, that 7.7 has not been touched.
So if I understand you using, in my own terminology, the way I put it in my own mind, the ARPA money using as a reserve, as a contingency reserve, to see how things work out come June 30th, and allowing these costs to remain in the operation account. Best case scenario, if we don't have to use it, then we have that ARPA money to spend on something else. Is my thinking correct?
That's correct. Additionally, and I want to say, I'm just checking now. So the 7.7, I said none of it has been spent. There are no actual expenses, but we do have $3,700 encumbrance, so technically not correct there.
The,
Small amount.
and I thought there was something that was said on the spending of that ARPA, it was accelerated, that we had to spend it by the end of 26, or am I wrong? Was there an
Since
acceleration on
June
it?
2020, that one is June 2026.
Okay.
There are other grants
Not
that were
talking about
recently
the
accelerated.
7.5.
This is not the one.
Okay.
And in addition, in a similar manner, there was money in the $7.5 million spending plan for information technology. In order to get the money from ARPA, it's reimbursed from the city. What has to happen is we have to give all the documentation, and that documentation has to include very specific language and verbiage in the purchase order and requisition. In addition, the vendors have to fill out an addendum. Everything is very specific. Once the funds are expended, we then submit them to the city, and the city sends them to a legal team, and that legal team reviews them to make sure that they are in compliance with ARPA. Once they give their documentation and they give their okay, they tell the city, and the city would then release the money to the schools. So we had approximately $1.0 million in IT expense that we had submitted to the city earlier. The procurement procedures, the city attorneys were not comfortable with. So of the $1 million we submitted, they said we'd be able to be reimbursed for a little over $300,000 of that amount. That amount is still in our general fund financials on this 1.8. Again, although it might not be able to be used now, it's being saved for a later purpose.
So what you're saying is a lot of red tape before we get the money.
Yes.
On that. What I'd like to recommend is for a couple things. One is more of just a cleanup, what you and I had talked about. At some point publishing, and maybe for June 30th, just making, and going forward, make a notation on the bottom of the statements that the statements are prepared internally, by yourself or your department. The other question I have is, on the health insurance line, it's a favorable variance of $4 million. You and I had conversations where your findings were previously the reimbursements for the employees for the health insurance weren't credited or applied to the financials or to the statements. Has that been corrected? Is this a net number, or is it still grossed up and there's an entry for the reimbursements we made against it?
So these numbers are actuals. So what happens since we're self-funded is each employee, based upon their benefits election, gets an amount that we deduct from their check. Most of our staff is paid throughout 20 pay periods, although there are 26. It's just how the contracts are set up. So a little bit of a fraction of the benefits are taken out in each pay period. At the end of that happens during payroll, and then after the payroll is happening, what I think the intention was in prior years was to look at what Cigna actually charges us from their monthly invoices as well as their weekly debits to the bank, and book the actuals and reverse out the placeholders that are created when payroll posts. And at last year and the year before, and possibly the year before, I don't know that that true-up was happening on a regular basis, but it is now. We are up to date as of April. We didn't post March yet. So these numbers are reflecting the actuals through the end of April.
When you say actuals, is that a net or a net that is net of the employee contribution that's taken out, or is it the actual expenditure for the claims?
Yeah, I think if what you're asking is this 4.
Or is there a net number?
The 4.4 is largely driven by the fact that the gross number is what's being budgeted, but the actuals that are being charged are not, that it doesn't include that employee portion, which causes a favorable variance at the end of the year.
So when does that correction get made?
So for this year, for fiscal +25, I'm requesting the ability to reclass that amount because it looks like, although the total amount of the budget of 160 might have been a good number, it just looks like it was incorrectly budgeted disproportionately into benefits. So in '26, we're not going to repeat that mistake. We're going to take into account the rebates as well as the employee withhold to bring that budgeted number down, and there'll be that amount will be offset in the other buckets.
Okay, so with regard to the budgeting in the future, my comment would be the same as I had with the rebate, that in the insurance lines, the health insurance, and you can broadly do it, I don't care about dental or the other, but you have the actual expenditure, which is an expenditure, a debit, call it that, then have another placeholder in there for an anticipated amount that would be the reimbursement. So when you look at these numbers, you can see on a budget line as well as an expenditure, when you do the actual, you can actually see what the gross number is that you're paying for the claims plus what the reimbursements are. So that somebody looking at the statements will be able to see, you know, can see what the information is and doesn't really have to guess and ask questions whether it's a gross or net number. These numbers are big, and it goes to, again, for the last 3 years, we haven't been able to use the financial statements because of things that you're finding out now. So all I'm trying to do is to say, going ahead, what we've learned currently is to just, you know, do things, put things in place so it makes things more transparent, if I can use that word, to somebody reading the statements.
Yeah, and to your point, we are trying our best to book on a monthly basis the entries that weren't previously being booked, so the deposits to the bank, as we're getting caught up in the bank reconciliations, you know, crediting the expenditures here as we get the rebates in. So these numbers are far more accurate. However, they are unaudited.
Right.
You know, so
Yeah.
this number isn't final per se, even though we might call it the monthly, you know, final financials, until we really go through the audit and make all those audit adjustments.
No,
But
I understand it.
I'm confident that we're much
My
closer.
appreciation to you, to Angela, to Joanne, and the rest of the staff for getting us to this point. You know, we've gone through 23, you've gone through 24, 25. Hopefully 26 will be a lot easier, and we can get to manage business, you know, based on reading statements and having to go back and correct statements, you know, for a long period. So that was my comment. That being said, as far as I'm concerned, on the operational statements, what I'd like to see also is come the end of the year, any major changes that you do that, such as the one you noted with the rebate, just be footnoted. If you know, as a case in point, when we were talking about the salaries and the ARPA money, just be footnoted on a statement, so it's reflected there in the footnote, so that it stays there as a matter of history. Okay? And again, I ask for that just as a matter of transparency, because although it's said at this meeting, you know, this meeting is attended by, you know, a dozen people, and anybody else looking at it, looking at the statements, is not going to be aware as to what we're talking about.
Yep.
Okay, thank you. As far as I'm concerned, unless you have any other
I just have one other, Richard, and the
comments on the statements,
the details
other than the grants.
The details are behind here if you want to look at it, but I just wanted to point out one other number that pops off the page here at me, and it's other purchase services, transportation. You'll see that number as at a negative 840,000.
Special ed.
Yes. So, again, it's kind of a misnomer. It says transportation, but it is much more than just transportation. But when last year's numbers were being done, we had noticed that there was an increase or a need to increase the budget for special education, specifically special education tuition. I think the number that was asked to increase was about 500,000. There was an adjustment made, but it was 500,000 being taken away, not added in. So if you take the money away from the budget, 500,000, instead of adding the 500,000, you get about $1 million. And if you turn to page 5, you'll see tuition sped private is negative 935,000. Now, of course, that is offset by the other tuitions in there, but that number doesn't surprise me, given the opposite swing, and that is what's driving the 840,000 negative variance.
Are there entries that would be made to this to correct it, or is there just a footnote that would explain?
I think this would be a footnote. These are actual expenses that we're seeing for private placements and private tuitions, as well as public.
So to the extent that that's been the frustration that we've had, is our inability to be able to explain variances because we didn't have the in-depth knowledge that you're finding out now. So with that knowledge, if we could footnote that, again, it makes a statement, you know, a better document, so that when somebody looks at that number, at least we can say, okay, we've identified a reason for that particular variance.
I don't think that's going to be the case in fiscal year 26.
No, I agree. I'm just saying currently. I'm
Yes.
hoping that 26 we get back to a normal type of situation, since it's yours, Dr. Casimira's budgets, you know what's in there, you know what's being applied, and you'll be able to explain variances because it's part of your product.
Yeah, and this year I had the opportunity to sit down with Kelly several times and understand the special education program a lot better, its needs and how the money goes in and out, what it's used for. So I think the budget that for 2026 in regard to special education is far more accurate than it was.
And Teresa?
It's concerning, we're down to 1.4 million, and we have May and June left. Do you expect anything that will cause us to go over that's not covered?
So these are as of 4:30, the statements and stuff has happened since 4:30, being that we're 3/4 of the way through May. One of them that you'll see in the statements next month, hopefully next month if it hits the bank, is again another credit from the health insurance company. We have a policy, a stop loss policy in place so that we only pay up to a certain amount for an individual. Once they hit that amount, the insurance policy kicks in. Of course, we pay a premium for that, which is built in there. But they will be giving us a credit for anything over that we may have been charged. We were recently notified as early as this week that there is just shy of $600,000 credit coming back. So this number will go from 1.4. It'll increase about 600,000. There will be unexpected costs between now and then, things that are not necessarily encumbered. The classic example that we use is a lot of stuff for graduation is not encumbered. Some of these sports are not encumbered for the refs and stuff. Yeah, overtime. Those numbers are relatively small. The big number that's going to come between now and 6:30 is the last payroll. Because as I'm sure you know, the last payroll, many of our employees have the ability in their contracts to get a lump sum payout. But that number is already encumbered, so that number is already kind of accounted for in that $26.9 million encumbrance.
So you're saying, for example, the coaches, is that for 1 month or for the whole year? That charge?
I think they do it biannually for
Yeah,
coaching.
it comes a couple times a year, and then we usually get a bill in the spring. But also, we are now, never used to be budgeted fully for. It's budgeted now, but any teams that go into extended season play, they make the playoffs, they need more buses and transportation, that need more referee fees and custodians to support the games, security staff, those bills can come in that are not unusual, but not necessarily budgeted. It's pretty typical this time of year.
The only item that I can think of that would be of significant dollar value, again, it's not encumbered, but we have no way to predict it, is any placements that happen for special ed that come in district. They do happen, but that would, I'm fairly certain it would be more than absorbed by the surplus we have now.
So I think, Teresa, what he's saying, and correct me if I'm wrong, Mike, is that he doesn't foresee any unexpected large charges that is going to, yeah, I mean, to the best of its ability. There's small stuff that'll come
I
in,
didn't
but,
know coaches were,
yeah, I mean,
things, because that number goes down awfully quick.
yeah, I mean, exactly, when you look at it, 2 or 3 months ago, I think we were at, I forget the month, the word would be in April. Couple of months ago, I think it was maybe January, February, we were at $9 million. And then the very next month, we were down to maybe 2 or 3 million because you made entries. And now, we're talking, had we had in 1/6 a -2. So those are big fluctuations. In a normal situation, in a normal situation, you'd say, wow, what happened? We didn't plan for this, but we hadn't planned for the cleanup either. So as we're getting toward this, we're trying to get to a point where at least Mike is making a statement that to the best of his knowledge, he's got things that he's encumbered or accrued, and the unforeseen other stuff relative to its materiality is small. Yeah, but it's nice that we keep getting these windfall credits.
Oh, yeah.
It's very helpful. Does anybody have any more questions on the grant schedule? My only question there is
Just one quick one.
oh, okay, I'm sorry.
Quick one. Is that health credit a repetitive one as well? A yearly one that we typically receive?
It's the first that I know about. I've been here for 2 years, so I can't say I have too much history, but it's the first one that we've had this year, certainly, and I don't know if we've had it before.
Other one. I remember the other one that you talked about.
Yeah.
Yeah, okay.
You remember? Oh, one,
I do, yeah.
Really?
Yeah,
Oh, yeah.
800, yeah. Because, we're looking for money, so that was nice.
Wow, interesting.
That's fine.
I've never heard of that, and so, but that's interesting.
I think, Richard, because it's one of those things, you can't totally count on it, so it's,
No, I understand, and I wasn't here at the time, so it wasn't, privy to what was coming in, but it was interesting that I was surprised, pleasantly surprised. My question on the grants is those that expire June 30th and that balances, do you have to spend those, or do you have a leeway after that?
so anything that expires June 30th, the grants end at all different times. The grants are tough because they are restricted funds. So it's once you have a grant plan and if something doesn't go to plan, sometimes it's hard to spend every single dollar. We certainly make a grand effort to maximize every grant that we have, but it's not always possible. But for the most part, we stay on top of the revision process. There's deadlines for revisions, and then you have to expend the money. Usually, now the way the state does it, they really switched the way that we do the grants. Everything's on a reimbursement basis now, so it made everything way more complicated. So you have to spend the money first, and then you put in for the reimbursement, so it kind of doubles the work on everything. And you have to have everything encumbered, all your expenses encumbered by mid-June, so then you can kind of draw down on the grant and get a final reimbursement. So there are some grants that just can't be spent. We often have, things in obscure line items that are hard to spend. If something's in an instructional supply line, for example, that's very easy to spend because we can order things for the schools and do those very quickly. But when something is like in a tuition line or sometimes purchase services, it's a little harder to spend, so depending on the grant rules and constraints. So for the most part, we do a pretty good job of spending that down. But I tell you, this year is the first time we could really see very clearly on the back end of how things are being spent. There's a tremendous amount of coordination with the finance office, special ed, in my office, and CRC, so that we don't leave any dollars on the table. We spend those to the best of our ability, given the constraints that we have. But again, it's not perfect, but this year I feel pretty good about that we had a pretty good plan and process. We spent a lot of time looking at every dollar and every grant.
So we're precluded from just any excess that's applied against utilities in the operation, and you can't do that.
100%. It's very tricky, and which is, again, what makes things a little bit more challenging for us is when we don't, anything that's not in the general fund it's like 10 times harder to spend that money.
This has nothing to do with anything on the statements, but I do recall hearing that there was something that was in the works, I wouldn't say legislatively, that had to do with the excess costs of special education that may be coming back to districts. Am I correct on that, or can you
Yes.
speak to that? Because what I'm getting at, if that is something that would affect us, when would it affect us? What kind of money are we talking about?
I'm gonna try to find the amount. Like, was it 300,000 or 400,000?
It was just under 400.
Just under 400,000. We don't know exactly when we're going to get it, but that was part of the legislative process where everyone was trying to get more back for the excess cost. And I didn't think we were maybe going to get it this year, but we are going to get an allotment this year. Danbury's allotment was in that $300,000 to $400,000 range. We're supposed to get it before June 30th, so that's another.
Yeah.
Whether or not it hits the account by then, I would think we would have to.
385.
What is it? Did it come in?
385, 334.
Did you get it?
No, I checked your email.
Oh.
Yeah.
Yeah, I don't have it in front of me.
Karen, if I could just add,
Yeah.
sorry, it goes, remember, all of our excess cost goes to the city. So we get excess cost and we have gotten it every single year, it goes to the city. And then the city can allocate it back to us or put it in our general fund allocation. So I think that is not a direct to the board, that goes directly to the
That's a
city.
good point, thank you for clarifying that. Yes.
So, when you say it goes direct to the city, is there, do we know that we would get that in its entirety? That it would be like acting as a pass-through, or because that's always been a question that has come up in the past is, how do we know we get the excess costs and stuff like that?
I mean, that would have to be worked out with the city. It is my hope that we would be, that was an expense that we incurred out of our budget that we would
Right. So
get back. But, sometimes there's situations where school districts, need to go to the city to cover some additional costs because they were unanticipated. And in that case, I would see that the money would come back and stay with the city. But I would, again, this is my first round of this. Kelly's certainly more familiar with the excess cost formulas and all of that. She has a lot of work in that area and actually does a lot of work to help recoup those costs. How those come to us is a little more elusive, whether or not they say, well, we'll give it to you next year, or that was part of your allocation. I don't know, that's something we'll have to work out with the city.
So it's nothing that we can, to your point, Teresa, and what you were getting at, there's nothing that we could, basically realize, it's nice to think it's something that may happen in the future, but it's questionable whether it would actually come in,
Depend on it.
for us.
Go into that reserve account, and we have now.
Do you want me to?
Kelly, go ahead.
Sorry. The city has always taken the stance that our excess cost is given to us through our general budget, our general allocations. Many other places, it is a separate funding source that is meant for excess cost of special ed. So those unanticipated placements that Mike is referring to, potentially you might have litigation, things of that nature, you might have a contracted service. We have over time been talking more heavily in the last handful of years with the city and acknowledge there's been some change in administration about changing the way in which that happens, because whether we've gotten $700,000 or $1.3 million, it comes back to the board in our general allocation.
Right.
So certainly with excess costs being big in, at the state level right now, as far as trying to get additional funds to districts, my recommendation would be that we continue those conversations that I know.
I would love to see a special education fund set up. That'd be great.
Yeah, there should be, it's unfortunate too, they changed the pass-through with the Alliance, that everything goes through, ECS. Okay, I think, anybody else have any questions on the financials?
I just want to clarify, when we talk about a special education fund, are we talking about something that's under the umbrella of the district or something that's under the umbrella of the municipality?
I would recommend it's under the district, because you know what your special ed, expenditures are. Certainly there could be protocols about when you need to tap into it. It really is meant for when you have unanticipated funds. So the way in which excess cost works is for every child that costs 4.5 times your per pupil, that's considered an exceptional special ed cost, and you get a percentage reimbursement back on that.
Thank you.
So, moving to the item number 2 on the agenda is the updates, I'm going to put the word update here, of the 2023 and 2024 audits. And as I said earlier, I had invited Joanne, who's the Assistant Director of Finance, is of the city, who's been working with Mike for a long period of time. To assist, not so much to assist, but to explain from her point of view as to some of the findings that she has discovered in the cleanup process with Mike. I thought it would be good to hear from an independent person, and I do want to say that this is the first time that we've worked so close with the city in a relationship that is really incredibly beneficial to both parties. I want to thank you for that work, Joanne. Thank you. Mike, why don't you take?
Yeah, I was just going to take a minute, very briefly, to talk about the 2023 audit surplus. I'm sorry, when I added this in, I didn't realize how small it would be.
In the future, you should print these out, because I'm going, I can't, it was the light too, it's hard to.
This is about. No, maybe we get the lights, because it's a little faded.
I'm sorry, as we try to pull this up, I'll just give a brief on this. So this report, the format you're looking at, might look familiar to some of the other reports we've run. This is how reports that we run directly out of the system look. They're a little bit cumbersome, but I wanted to come right from the source. So this is the 2023 surplus in our Tyler Technologies system. You'll see that bottom number, the 7.9, is the surplus number that we're familiar with. There are some pluses and minuses definitely throughout here. Again, which is no surprise now that we know what we know, that a little bit of this was driven by salaries, $738,000. I attribute that to either open positions that remained open or positions that were vacated throughout the year. But the main driver of this 7.9 is really employee benefits. Employee benefits, that line, which again labels incorrectly as Social Security. There is Social Security in there. There is health insurance. There is long-term disability and life insurance is another account in there. Workers' compensation is an account in there, as well as unemployment insurance and the dental benefit. So all combined, those numbers lead to the $8.5 million surplus.
Mike, what are some of the, I can't see it, so unfortunately, what I have, you mentioned salaries and health benefits. What are some of the other?
So for purchase professional services, there is a favorable balance of 1.36 million. The next line down, purchase property services, relatively small, negative 174,000. And then other purchase services is a large negative 1.21 million. Supplies were very close to being on the money, favorable 65,000. Enrollment, impact, and equipment was unfavorable 205, call that 206,000. And then we were favorable on the dues, fees, and staff development. The other thing I wanted to point out is that last line, undesignated, which you probably can't see right now. We've seen this in a couple of other sets of financials. I think it was in the 2024 number as well. That appears to me to be a plug in the budget to get the total GL budget to equal what the entitlement of 141 million was. I don't know that that's necessarily tied to anything. So the vast majority of that negative $1.5 million budget entry remained as a negative budget balance. To me, that does not make good financial sense, but nonetheless, that's where we are.
So first, let me ask this. I'd like to see a copy, if that's okay, that I can have a hard copy of that. The other thing, as you mentioned, I'll bear with you, Teresa. The other thing you mentioned, you gave an explanation for the first item, salaries, where you indicated a lot of it had to do with the unfilled positions. What explanation can you give, like for salaries and some of the other items? Can you generalize as to how this came about? What I'm getting at is it's good to have a schedule, but the schedule itself says one thing, but to me, it doesn't say how it occurred. What your comment relative to the salaries made sense, so I could say, okay, that I could understand that. But what I'm getting at is, should this document then be footnoted with some brief explanations as to the findings as to what created this surplus?
Yeah, I can try to put something together that would maybe elaborate on this. If you take away the employee benefits, there are pluses and minuses. They all almost net out. It's almost exclusively driven by the employee benefits, and I think that those small pluses or minuses, I think are just due to budget allocations. When we try to extract the budget to see what exactly was budgeted for in those lines, as we know with 2025, there's very sparse information as to utilities were budgeted here, or this particular line was supposed to include this but didn't. And I think that's like I said, I can try to give it by.
Well, you've answered that too. The small stuff that nets out, you can just indicate, summarize is the budget differences, etc. But the other two big items, being salaries and benefits, if you can identify some of the findings, I think that you found to be there. If it just says poor who are estimating for the budget. You know, I don't know if that's the reality, but.
Well, it's kind of misleading. He said the main driver is the employee benefits, and he just has social security, but then he did a litany of a list of things. And that would be helpful, have that as a footnote. Salary, unemployed versus empty, vacation.
Right.
Yeah.
Vacancies, that type of thing. But the employee benefits, that social security, that gets me.
Well, yeah, but that's a broad terminology, but you could specify that the bulk of this has to do with health insurance. You know, we're dealing just material
Yeah.
numbers.
I
Not
I can certainly break that up by those 4 different groups. What you'll see, the little bit of digging that I could do is that 8.5 is almost exclusively health benefits.
Okay.
But I will, nonetheless, I'll break it out.
Yeah, just that, you know, I
And-
have to break down everything.
Kara and Mike, to your point, a couple of weeks ago, at the council meeting, Councilman Coelho had asked for this, what you said, that you would respond. Have you given, or, you know, what kind of response, or, you know, have you responded, and how are you going to respond? I remember him saying, you know, don't do an email, but I just want to make sure that we dot the I and cross the T in responding to a request which we indicated we would.
Right, so Mike and I talked about like a memo, just producing a memo, but we wanted to make sure that this board had, you know, an
First glance.
opportunity to have a conversation about it. First, a couple months ago, I think, you know, Mike did report out on these numbers in
I
a
remember.
different format, but this is a little bit more detailed, so we wanted to make sure that the board had the detail first and answer any questions before we put it in a memo.
Yeah, and if you do a brief description, I think that would, you know, logically, somebody would say, okay, you gave me this, now, you know, how did it occur? So, however you come up with that. Yeah, that's 23. Getting on to 24. Where do we stand on 24? I'm going to ask Joanne, what kind of a target date do you anticipate to have the audit completed by? I thought you had indicated either August 1st or August 31st, am I wrong?
No, that is not going to be a completion date. Our end result that we need to get to in auditing 25, the 25 audit needs to be prepared and completed by February at the very latest. The aim is for January or December, right? So I don't want to speak on behalf of our entire office, but that is the goal that we need to get to be considered timely by the state. If we file 25 by next February, that is with 2 monthly extensions on the original deadline of December. Okay, so the goal of the city, we have findings that come from the audit team that say that we are late in our audits. It's what gets us all of these extra meetings and explanations and everything. So if you have those findings more than 2 years in a row or any significant finding, then you need to do reporting to MFAC at the state, which is the committee that oversights the municipal finance. So we'd like to, right, we'd like to move away from that so we can have more time to actually work on doing our daily functions. So if we bring that up, my goal for 24, and it's the only goal I've set, is that I need to receive a draft of the ACFR by no later than the first week of August. So we are aggressively marching to that date, because if we can turn around a draft in early August, we can have the report by August, early September, and then start working on the next one. Any advantage we have in pulling that date up, we will be doing. We've hit a milestone, I would say last week and this week. The planning stage of the audit for 24 is almost complete. Just give a little statistics on the DPS side. They started with planning items, I think of about 30 items that were requested by the auditors. We're down to 5. out of that, and out of the 30, 27 are already accepted by the audit team. The ones that are remaining have to do with just administrative issues between RSM and us. They're confirmation letters and something called CBDA, which is the software component of a new GASB that went into place the prior year. We have to scrub all of the disbursements of the city on both sides and respond to whether any of those software agreements exceed our threshold or they are greater than an agreement with the software company of 1 year. And that requires us to book a special gross up asset and liabilities on the books of the city. So you won't ever see that on Mike's reports though. That's an overlay of the reporting that will be done at the city level.
Somebody call me.
Yeah, can I just ask a question? So at this time, you have everything you need from the Board of Ed side?
That is correct.
Thank you.
So that is the
The
milestone.
lights on, excuse me. Thank you. I'm sorry.
I'm sorry.
Go ahead, Julie.
Yeah, so now, I don't want to say we sit and wait, we moved to something called field work. And field work is a little bit more intensive. We have some stuff we can fulfill already for field work. Field work requests from us cash bank reconciliations, subsequent ledger and bank reconciliations, so we have to provide them with July and August of '25. That is so that they can test under-reported liabilities of the city. I'm trying to think. So we are ready now that the planning stage is over. I'm actually still working to get the multitude of trial balances from the city to the auditors. Schools have been submitted. We submitted the entire general fund today, which is schools are consolidated into that. It might have been yesterday. So these are significant milestones. What's going to happen now is the auditors receive this. The general ledger detail reports provide them with what's called a population. They sample those populations, and then we get hit hard and strong in about a couple of weeks' time, where we then need to provide them with very detailed procurement, bidding, invoice paid, payroll records on that end. And I will state we're almost through. I think within the next week we'll be through with the pension audit, which involved us getting records. I've just heard today that there's been 7 or 8 samples on the side of the schools. So we'll fulfill that maybe next week. Came in with a total request of 50 records. The rest are for the city, but you do have some sampling involved in that. And that is from the auditors. But we have our third party is preparing the disclosures for all of the pension plans and the OPEB plans, and that involves the roll-up of your non-pension and your non-DB, your non-DC and your non-teacher retirement plan employees. Okay.
So we are in, from what you said, much better position currently to give back and where we are than we were when we first started this mess looking at 23.
Yes, but we still do have some adjustments to go, right? We're still working on things like capital assets, depreciation, items that I would consider to be off books, even for the general fund. For 24, as a result of what we went through, we do a complete review of the expenditures to make sure that everything was placed in the correct year before it goes to the audit team, so that we have less findings. We minimize our findings. We can't go through the entire year's worth of stuff. And the adjustments to the general fund were very minimal for 24. They also were very minimal for 23. So the team is doing an excellent job in getting your expenditures into the reporting year that they need to be in.
And let me ask you this, in your experience in working with Mike, and I'm sure collaborating with him, what can you tell us about some of the, I'm going to say findings, material findings or deficiencies that you've come across in doing the cleanup work that perhaps we could improve on going forward, or some recommendations that might bring, it might incorporate in going forward?
I can state them, but I will tell you, you have an expert here. He has about as much, almost as much financial background as I do. All of his recommendations that he on his own is putting into place is exactly what I would have recommended. It starts with just a checklist. We're very fortunate the state is now putting out, guidelines and checklists and suggested things that you can do and how often to reconcile certain accounts, right? So we know the recommendation is that cash would be reconciled on a monthly basis. So back on track with that, but currently using CLA as the consultant to assist us pretty heavily with that right now. The goal is to get transitioned from that to the team here at DPS, preparing those recs and clearing any rec items. Right now, my opinion is they have a separation of duties issue. The team is very small, so that's going to take Mike getting, I think, at least one additional person and then moving some staff work around so that he can meet those goals of independency. And that basically means with cash control, you don't want the same person either paying, approving, reconciling, right? You can see where that would be an issue, right? We do that at home with our own checkbooks, right? I have a bill to pay. I pay it, I reconcile it, right? There's no issues there. It's my personal account. But for this money, right, you want to make sure that you have very clearly, you have controls in place so that it's not even questioned that somebody could be, right, doing both paying and approving, right? That kind of thing.
Thank you. Excuse me.
I'm sorry, if I can say one more, because I think this was a huge improvement. Angela, I'm gonna put Angela on the spot here. Student activity funds have been a point of discussion over the years. I have seen since I came in and let's use the word assisted, collaborated for the 23 audit, one of our delays for that 23 audit was the student activities fund in gathering enough information and detail about the expenditures without using the bank statements, right, which have copies of the checks, right? We really wanted the people that own those accounts to come and report to us. Angela now has a system in place where she is receiving on a regular basis the financial reports from each and every student activity fund that's here in the city, and I think that is a huge accomplishment. So thank you for that. It was actually one of the first things that we closed for this audit for 24. A huge, I want to say almost like a 5-month improvement in lead time from being a lagger of 2 to 3 months to being ahead of the other information submitted to the auditors by 2 months at least. So,
Thank you.
yes.
Teresa?
Thank you, Rich.
The consultant, who pays for the consultant?
Do you want to take that or should I?
Well, for certain things, I think all the invoices technically go to the city.
They're supposed to, so your portions will be coming directly to you once we straighten that out. So the first invoice did come to the city. We had to kind of push it down to DPS for their portion, but only because it's carved out.
And I think that was the $3,700 we saw that's
Yes.
charged against ARPA.
Okay, the other question is do you meet in person or on Zoom with the auditors?
It's all is it Zoom? I think it's Zoom.
Whichever.
With both CLA, we meet weekly with both CLA and with RSM. The only in-person meeting is when Joanne comes in, blesses us with her presence.
Thank you.
We do have members from CLA to get started on efforts that they're doing with us. They will come to the office here for DPS. At least I can think of at least 2 or 3 of their folks that have come and met with the team, spent at least a half a day with us, and to understand what we need them to do for that particular project, and then we will usually continue that online. It's very hard to get talent right now in Connecticut, and we're very grateful. 2 of their local people that can come to us, one of them comes from near the Massachusetts border, and the other one is from West, I think the Hartford area. So when we do ask them to be on site, right, we're consciously asking for another 2 hours, almost, right? Potentially billable time versus being able to do something remote, so.
I understand, in the past, what we experienced, they would ask for certain documents. We thought that was it, and then it wasn't until 3-4 months down the road, oh, we need these documents. During COVID, it was awful, awful, trying to get a handle through Zoom, through remote. It was just difficult.
I think that was a difficult time for everyone. Everyone was adjusting to working remote and gravitating to as much as you could to a paperless society. In my past thing before here, right, we struggled also in getting to the point where you could do 100% of your business remote, right? It's a very difficult transition. From an audit program perspective, because I've been on both sides, right? Sometimes they will ask for information, you fulfill it, and fulfilling it just possibly leads to more questions, and you want to satisfy them. So what could happen is they could see something and then decide, oh, we need to see more of this. They could get something and they could decide we need to sample more. We want to make sure that this particular thing, which is a control, we want to see that it's executed in multiple places, right? And then once you make an adjustment, if there's any audit adjustments that are made, which that can be a pretty regular experience, that increases or decreases your population. Okay, so we especially see this on the single audit, which reports for the entire city, all of our federal and state grant monies that come in. If you have an adjustment to any of those grant expenditure lines, even by a small amount, it can move your entire threshold for a major or minor program, which can then drive a resampling of the information. I'm going to just give the one example, just so you understand. Adult education has 2 pieces to it. In the grants fund, I might be getting a little more detail, but I think you guys are asking for more of this kind of detail. We discovered that the piece of adult ed should not be reported on that single audit. So you take that back away from it. What that does is it changes the entire population of what's being sampled by the auditors, right? So that's a situation where we took away from the expenditures, but it lowers everything and then just changes the threshold of what you're testing. So it drives additional work.
Thank you, I understand. It was just the lag time.
Oh, it sounds
between
frustrating.
questions. It was just so difficult to move ahead. It couldn't move ahead. It was 1 step forward and 10 steps back. That's what it seemed like.
But what we've learned too, you're much better organized today than you were before, where it's easier to fulfill. Yeah, it's easier, so it's a different ballgame. Mike, thank you, Joanne, I appreciate your commentary. Mike, do you want to add to that, any input that you have?
No, I'm just very thankful that we have Joanne and Angela working day in and day out on this. Before that, it was kind of me trying to do it by myself, which, as you can imagine, on top of doing everything else was very difficult. So thank you both very much.
Thank you. Moving on to the next subject, financial reporting and controls. I put that in there only as a placeholder. At this point here, based on your observations, well, let me go back to 24. Are you still in the process, I probably answer my own question, are you still in the process of making entries to 24, and at some point would you report back to us what you feel the ending number is, so that we have a handle on it before it hits the press and all the other stuff? If you're still in the process, I don't want to ask you what the number is today because it fluctuates, so I'm not going to get in that. But if you have a feel for some sort of a date where you feel comfortable in saying that I finished my work and this is what I come up with.
Yeah, the 24 is still under audit. I think I would be best to make that level of comfortability after the audit is given. up until then, we're going to be making changes. And similarly, as we spoke about in the fiscal year 2025, as we go through it and we're looking at these financials and we're looking at all the variances, we're starting to notice that there are things that are budgeted that don't have requisite expense. Quick example is we budget salary for our custodial staff. There are actually two lines. One is the actual custodian salaries, and the others, you may remember from previous years, was custodial overtime. The way our system is set up, one of those individuals will have a particular code associated with them, and all the monies paid to them will go to that code. So in our financials, we have a line that has a budget, and it says custodial overtime, but we don't actually book anything there. In fact, we don't really measure overtime at that level. So we're going through a process now in the fiscal year 2025 of making adjustments year end to reallocate some of those expenses that maybe weren't allocated correctly when the budget was done, and perhaps reallocating some of that benefit expense to other lines so we can even things out.
When you finish 24, can we have some of the summary as you've highlighted for 23 with some of your mobs, so we stay with consistency there? The next item I had, and it was the topic of financial reporting controls, is just to mention that in a future date, I hope in the near future, let's say by June 30th, you could report back to us what some of the changes that you would like to implement, whether it be procedural, control changes, such as the list of closings and stuff like that, that would certainly benefit the operation from being more efficient and give the board members some sort of an idea as to what is due, what's involved, so that any change in the board members will see that at this particular time of the year this is due, and this month that this is due, etc.
Absolutely.
If we can have that in the future. Are there any questions on that item?
So I just wanted to ask, you mentioned the deadline or the end of the 2024 audit, projected end?
I think the draft, we were looking for a copy by August 1st.
Yes, so in order to get the report completed, that's my target. But we should have more final numbers earlier than that, because the compilation of the report does take some time. So that means we would need to be completed with the audit testing by July sometime. I think that's possible. I mean, two full months. But understanding that a lot of what the city has to get through, right, it's not stuff you see on this side, right? So schools kind of has to move with us, and we've got things like pension and debt and more complex topics from a accounting disclosure requirement that we're not going to see the full report and know that we're closed down on any adjustments until we get to that stage.
So they'll generally be in August.
Yeah, I think August and maybe by July. I don't want to commit to that, right? Because summer's coming up too, right? So
Just wanted
to be
know,
honest.
was it September or October?
No, because we're going to be in a different place if it is, and we can't be in that place, right? We don't want to go back to that. So we're trying very hard to fulfill everything that the auditors need. We've got project management built in from the city side, the external auditor side, from the consultant side. So we're all just trying to really help this. I think a big thing that we looked at was something we call lead time, right? So on the student activity funds and on the pension, they have the longest lead times. So what could we do for this 24 audit that wasn't in place for the 23 audit to reduce that lead time? And confirmations is one of them, right? Confirmations, pensions, and I can't think of just one of my student activity funds was one of them, but it's not anymore. So that was a good improvement, and we've actually gotten a very good handle on the pension census data as well.
So one of my objectives is to have a set of financial statements that we can actually rely on, be proud of, but also in the interest of transparency, to make the information that we have is a matter of record, but equally as important is to establish relationships, that is with the city itself, is to establish a relationship with the city so that we work together, so that we understand each other's issues that we have, and work together to meet those challenges. The other thing we have to work on is the general public. A lot of the public doesn't understand what our plight is on the financials, and we've got to, with the transparencies and the better statements we have, work to making the general public more aware as to, one, us being the custodians of this money, and two, our plight in terms of the finances. We seem to do this, we do it at our meetings monthly and stuff like that, but there's, as I said, a dozen people that attend this. We do make more of an effort once a year during the budget process to do the presentation. But I think we have to get more people involved. And by that, I think being more transparent on these statements would do that. So that's something that through community relations and finance that we could work as an objective to bridge some of these gaps that we haven't had in the past, that would help us work together. Moving on to the next topic is the exempt, it's number 4, is the 2024 budget. There's a recommendation that a motion be made that the Finance Committee recommend to the Board of Education to authorize the Chief Financial Officer to make year-end line number adjustments to the balance of the 24-25 budget. Kara and Mike, if you want to speak to that.
Sure. So, with so many moves that Mike needs to make, we just wanted to make sure that we had board approval to authorize Mike to make those moves. It's not the kind of thing that we could keep coming back to a meeting for each line item. There's so much work that goes involved into cleaning up the budget this year. But to move the larger lines around to balance is something that we wanted to make sure that the board was okay, so we can close the year out, correct the books, make sure things are in the right places, and then Mike, of course, would keep a record of those things. So if there's any questions on those, he's been doing a great job of making notes in any entry or journal that we have. There was far more record keeping and notation going on to leave a roadmap for every move that's made and why, as to why. So we're trying to do things procedurally the correct way, so we just want to make sure that the board is okay with Mike making those adjustments to close out the year.
I don't have any problem with that, and Mike has been doing that since day one when he got here. So it's just a matter of having it on record, and any, as Dr. Casimir had said, any information we need relative to what these adjustments are could be furnished to you. I mean, at this point here, there's got to be hundreds and hundreds of entries that have been made between the 23, 24, 25.
Right, there's been reclassifications happening.
Yeah.
To move folks around, but this is a little bit different. Mike, do you want to explain some of the things you did?
Yeah, so the entries that have been made up to this point have been on actuals. So as I see things that are coded incorrectly, perhaps like a paraeducator that's supposed to be charged to salaries is charged to purchase services. This is more talking about the reclassification of the budget line items, which I think came up earlier in the year, that it should be only through board approval that we make those. So I just wanted to make sure that if I keep a good record of it, that it's approved by the board.
So to accept this, I mean, I have no problems that we have to take a vote or we just raise our hand and say that, yes, we agree to this, and we'll recommend it to the board at the next meeting.
I think we make the motion based on what's on the agenda here, and then, just like policy, right? We make a recommendation for a certain action, and then it'll appear on the next board meeting.
So basically, we could say all in favor of this particular motion, just say aye.
You need to make a motion.
Oh, make a motion.
Yeah, I'll make a motion.
Okay. I'll second.
You want a second?
Yeah.
Second. All in favor?
Aye.
Good, thank you. Okay. Next item, on the agenda is the exempt salaries for the 25-26 budget allocation. Turn that over to you.
Okay, thank you, Mike. So this slide represents the salary adjustments that we're going to make for the exempt staff. Exempt staff comprises cabinet, extended cabinet, other exempt members such as some folks in technology, a director of technology. We have our HR generalists, we have payroll. We have a wide variety of positions on the exempt list. In addition, we have some service providers such as our PT and OT folks, as well as American Sign Language and interpreters that are on that list. And I grouped them into 3 categories. That kind of came up last year a little bit so folks can break out and see the differences. So on the cabinet side, everyone is a general, for the most part, 3.5% wage increase across the board. The exception, of course, of myself, which was at 2.5%. That's part of that cabinet number there. And then I did have another member at 4.5% to make an adjustment and acceleration for market rate, if you will. But the cabinet is total comes to about 2.97%, non-cabinet 3.5%, and then OTPT, BCBAs, and American Sign Language interpreters are 3.5%. The overall rate is 3.35. It's well under the originally budgeted allocation for salary increases. The new positions that are coming in, those don't get an increase. Those are just in the budget for 213, 140, and then the restored, which includes my former position, and the security, thank you, the security coordinator would come back at that rate. But those are the positions that would be on this exempt list next year, which is why I wanted you to see those here. I will add that 3.5% is barely a COLA, cost of living adjustment, across that group. It's a very, very modest bump. And, you know, I really struggled with this year, struggled with it last year, but, you know, only because when we look at some of what's on the exempt list, there are definitely some positions where we're not keeping up with what the positions are commanding across Fairfield County, locally, in Connecticut. Joanne mentioned that finding talent in Connecticut is extremely hard right now, and that is very true. As we head into, I think you guys know that my priority is to be competitive in Danbury. We see what has happened with our paraeducator contract when we lose ground over time, or surrounding towns are moving more quickly, accelerating more quickly than we are. It put us in a really tough position. And so what I'd like to do over the next year is to really go through this group and to do a true market analysis. And I think it's something that we should do maybe every 3 years to make sure that we're staying on track. For example, we can have someone who's staying in a position for 10 years and they're making $55,000 or $65,000. They leave us to go somewhere else, and this is happening right now. They make an extra $20,000 or $25,000 a year. So the only way that they can make more money is to leave Danbury, okay? And then what happens is we post the job for the rate that it was currently, that person left, and we get how many applications, Mike? Weaver? Almost none. Or if we're getting folks, they're not the folks that we would be willing to hire. So we end up having to have meetings to talk about how can we adjust those rates because we're not attracting the proper candidate with the correct skill set. So you end up correcting it, you know, independently, and now you've lost a good person that you spent years training and investing in. So you end up paying some way down the line, one way or another. And so we're seeing this in a couple key positions over and over again. I cannot tell you how much time our folks spend trying to hire people, the amount of time behind closed doors interviewing, onboarding, training, only to lose. And it's something that we're really gonna have to take a hard look at. I tried my darndest to gather contracts from all the different areas, and they were hard to get this year, to get a full value of all the different positions that we have there. So I'm gonna be doing some work over the course of the next year to put that together so that we have more information about the different groups. But it's the entire group. It's not just the folks in the middle, it's the folks at the top as well. And everybody doesn't like to talk about some of the higher salaries that we have here, on cabinet. But I can tell you that some of those salaries are not in line with the market. And we are experiencing, there's poaching that's happening. We have headhunters that are approaching people on a regular basis. And again, we need to just take a good look to make sure that we're in line. And I don't think we're super horribly out of line with some of our positions, but in some cases we are with others. But instead of just willy-nilly applying different percentages all over the place, I'd like to have the data and the research to back it up so we can have a discussion. And I do think it should be our practice to take a look at that every 3 years to make sure we're keeping up. And then these smaller incrementals in between are more appropriate. But when we do these smaller incrementals, when we're not up to speed, it's a painful pill to swallow, and it makes people say, I don't know if I want to stay here. So it's something I hope we all take very seriously. I'm taking it very serious, and I'm doing some work in that to bring it to you, and certainly welcome your feedback and participation in that process as well.
I think it's very important what you said in terms of, the opportunity cost we have when we lose a person. It's a tremendous cost to replace that person, with the knowledge that they had, and also the training cost of a new person coming in. So I think you're on the right track. It certainly saves us a lot of money in the future, and it helps us build our staff and accomplish the goals that we want. Can I ask you to go back to the first schedule? I had a question on where you had new employees, new positions.
Yes.
What is that number? Is that new positions for people?
That is
You're looking
new
to hire?
positions, HR director,
Oh, okay, so these are-
and, I'm drawing a blank. Hang on a second.
so they're in.
The associate.
The associate is in the restored, so that's a new, so it is and it isn't. So it's an assistant, but the title was tweaked a little bit to up the stature of the position. That is my old position. As a restore, with a little twist on the title.
So your own position is going to be filled as an associate.
Correct. It's just a differentiation in the level.
That's what I said, your contract, this is kind of a backdoor behind your contract.
Which contract?
Your superintendent contract, not to have an assistant superintendent of academics for 2 years.
That's not what what that was a memo
We can
that
talk about
that and I can explain that more to you, but it's a little bit different than how maybe you're thinking about it. That's okay?
So the new positions are new people that you're anticipating?
Staff accountant was the other one.
Thank you, staff accountant. Sorry, I was like drawing a blank.
All the ones.
Of all the ones, yeah. So it's the staff accountant and the HR.
Thank you. You've answered the question. Thank you very much. Are there any, do we have to pass on the approval of the presentation that you've given us here? Or is this a matter of information?
No, so it's right. So it's the certainly welcome the discussion, but it's not an approval process necessarily. Right.
Yeah. It's one for me.
And we're looking for other ways to make some of these jobs more attractive. When folks come in, there's maybe different work. We're going to try to look at the whole, not just the salary, but all of it. Like, what do we offer in terms of benefits and packages here for DPS. So we're gonna look at everything. So it won't just be on salary, we'll look at everything.
Well, great new building over on the west side.
Yes, for those who are going there. Just as many people will say, that's adding 20 minutes to my commute, so, yeah, you can't wait. That's, I know, Mike's in that boat, I'm in that boat.
Really?
But it's gonna be a nice building for sure.
Okay.
And this is working out much better that we do this now as we said we were going to do. So
Yes,
it
in
creates-
finance, have to
It
discuss.
creates the chaos.
Yes,
of
talk
things.
about the math a little
Yeah,
bit,
yeah.
yeah. So the total salary adjustment is 170,000-ish.
Thank you very much.
Yeah.
Is there any, does anybody have any questions? Nothing? Okay. I want to thank everybody for attending tonight. I found it very informative, and I'll take a motion to adjourn. Teresa? Second by Kate. All in favor? Aye. And thank you once again